Welcome back to today's discussion, a last part of our discussion on reverse charge mechanism. Uh, a very different kind of discussion to the extent possible. We are connecting with the various exempted services which are applicable for both forward charge and reverse charge. But just many times it is not striking us that be it in case of forward charge, be it in case of reverse charge, the same said exemption is applicable. It's only the liability to pay tax gets deferred. Sometime as a supplier, they have to pay tax. Sometime as a recipient, they have to pay tax. As a supplier, if I transport milk, then transportation of milk is exempted. If as a recipient, I'm going to receive some services in connection with transportation of milk, and as a recipient, I am also exempted from payment of tax. When it comes to exemption, it's a common exemption. It nowhere comes out and says it is only applicable for payment of taxes under forward charge or payment of taxes under reverse charge. But many times it is misunderstood that the exemptions are applicable only for forward charge. No, the exemptions are equally applicable for reverse charge. In fact, exactly we have only 3 discussions to make. Of course, in my humble view, it's only 2 discussions to make. Once that discussion is over, quickly we will step into a next part of the levy, which is composition levy, so that complete levy chapter is getting concluded. We'll try and see to close for the day that aspects. However, subject to our understanding and time availability. Coming back here, on the other day, we have discussed about one of the reverse charges that is covered under IGST notification. In fact, what are all services we discussed earlier, all are equally applicable in IGST notification. When it comes to import of service, there would be only one difference, or rather put it in a different way, import of service and transportation of goods by vessel. These 2 entries are a special entry which are there only in an IGST notification. Let us clarify that doubt. Why only IGST? I believe we all can instantly appreciate the fact that in case of import of goods or import of service, it would be considered as a intrastate supply, interstate supply, only intrastate supply only, interstate supply only. I am possibly posing 4 options. In case of import of service, let me repeat it, a very famous MCQ. Once earlier have been tested in exam. In case of import of service, import of service is a intra-state supply or interstate supply, or it is going to be, look at the change in the wording, or it is going to be intra-state supply only or interstate supply only. I'm just adding the word only into it. What it is? What it is? Quick. Want your response? Intra, inter, only intra, only inter. Quick. Yes. Morning, Monday morning. Yes. Quick. A few of you have already answered. Okay. Yes. Vivekanandan, can you check your answer? Sai Subramaniam, can you check your answer? Among the 4 options, Yes, Kritika, check your answer. Uh, it would be interstate supply only. Let me repeat. I am expecting that word only. Why we use a word only? Because at no stretch of our imagination, a intrastate supply is possible. It's only interstate supply. Sir, how do we can confirm that view? Recollect your section 7 subsection 2 and 7 subsection 4 of nature of supply. In case of import of goods or import of service, it shall only be considered as an interstate supply. Be that as it may, go back to Article 269A discussion initially we made. Again, Article 269A made a point very clear. In case of import of goods or import of services from another country, shall be deemed it as a transaction in the course of interstate trade or commerce. Starting from Article 269A, giving weightage to section 7 subsection 2 and section 7 subsection 4 of your IGST Act, import export transactions, SEZ transactions, always will be treated as a interstate supply, only as an interstate or interstate supply only. Meaning thereby there is no scope for somebody to think about intrastate. True. Done. Yes. Moving forward, import of service. We have discussed enough. What is on tax? What is a non? Who is going to be non-taxable online recipient? All that word we have tested. We are not going to spend today's discussion on those aspects relating to import of service. I just wanted to have a MCQ to be tested, which is going to, in any case, part of our discussions. Coming back here. This is one of a very important entry, and this entry has its challenges which has been present across India, and as of now we have 13 plus court decisions. Of course, all are writ petitions, all are not assessment based decisions. And again, one of the matter is now pending before the Supreme Court for its final disposal, writ petition, final disposal. Whether a levy of this particular reverse charge is valid or not, whether this reverse charge creates a double taxation associated with it, so on and so forth. To make an understanding about this reverse charge, let's first understand there is an exporter of goods. There is an exporter of goods in Hong Kong. He want to export the goods to a importer in India. That movement of goods can happen by two ways, broadly. Either by air or by vessel. If it is by air, we are not much bothered about it because it is exempted from GST. Later when we get into the relevant exemption notification 1919 capital A, we would know that aircraft movement of goods is going to be exempted from one country to another. Very interesting to note. Then vessels, will it be taxable? Yes, vessels will be taxable. Transportation of goods by vessel. Something very important to note over here is supplier of service and recipient of service. Both of them are in non-taxable territory, but beneficiary alone is going to be in taxable territory. So first of all, how this is possible? Will it be possible? Yes, there would be possible. For which we have to draw some diagrams. We'll go draw those diagrams, take grip of this discussion, and then come back over here and learn through what is the intention of the lawmaker. Yes. So to start with, there is a exporter of goods. Exporter of goods. Words are all important. There is an exporter of goods who is going to export goods to India. There is a importer of goods who is in India. Exporter of goods, exporter of goods in Japan or not Japan. Importer of goods in India, exporter of goods in Hong Kong. Okay. Now, goods need to move. Goods need to move all the way from movement of goods should happen from the movement of goods should happen from Hong Kong to India. How do the goods moves? The goods moves by transportation of goods by or transportation of goods by vessel. This is the background for this transaction, not the transaction per se. Let me repeat. This is just background for the transaction. Now, here I would give you two options. Option one, ask the Indian company to take delivery of the goods at Hong Kong port and ask the Indian company to import the goods, okay, or transport the goods on its own self. Okay, option one. Option two, ask your what is it, Hong Kong fellow to transport the goods. Which option you would prefer? And I want answers. I'm very clear. Only based on that collective discussion we can move, not on an isolated discussion. Option one, ask the exporter to transport. Option two, which is going to be ask the importer to transport. What option you will prefer? Exporter to transport the goods or option two, importer will transport the goods. Let me repeat, your wish, I would not step in at all. Already few people said it is option one is always better as the exporter. But I just want to know a lot of you, and let me repeat it. This is one entry. If you understand from here, mark my word, it would be the easiest entry on earth. So, but for five of you, rest of all not interested. Huh? Option one, option one, option two, Balaji. Good. Yes, option two, Vaishnavi. Put yourself as a businessman, understand the risk responsibility. Okay, goods comes into from another place to this place. When the moment goods comes in, on the seas you have certain challenges, on the air you have certain challenges. Are you interested in taking up all the challenges, which is in terms otherwise called as risk? Those are all the associated questions that need to be asked over here. As predominant of you have raised that we will ask the exporter to transport the goods, we will say transportation of goods will be with the exporter, which means importer will import the goods on CIF basis. Importer imports the goods on what basis? CIF basis. What do we mean by CIF basis? Cost including insurance and freight. A word which we are very comfortable when it comes to customs law, if we are little aware of it. A word, new word, which we need to know today. Yes, first criterion I have to check. Is my imported goods are in CIF basis? Option 1, whoever picked your import value, $50,000 CIF basis. Your import value, $30,000 CIF basis. Sir, if I would have opted option 2, then what would be my modality? It would be called as, anybody want to text and share? It would be called as, if somebody opts option 2. Yeah. Super ba. Kalagringa. No. Vaishnavi, not landed value. No, not. It would be called as FOB basis. A lot of you are all right. FOB basis. All of you are all right. Now, one of the discussion here is when the goods are imported on FOB basis. We are not bringing up here. One of the prima facie criterion for discussion itself, it should be on CIF basis. We are very clear. It should be on CIF basis. Then only we are bringing it here. Otherwise, we are not bringing it here at all. So make yourself little clear. This entry of RCM would be applicable if and only if goods are imported on CIF basis. Sir, why CIF basis? Then only the cost of transportation and the risk, everything will be with your exporter of goods. Your exporter of goods is responsible to transport the goods until it reaches your Indian port. Until it reaches your Indian port, the risk of transportation is with the, the risk of transportation and all the other aspects are with your exporter of goods. The exporter of goods is responsible for all this. Okay, so you have to understand it only in that perspective. Beyond that, nothing. So, complete risk of transportation, the complete benefit, advantages, disadvantages, all the cost of transportation, everything would be cost, risk, and responsibility of transportation of goods is with exporter, which means the importer has nothing, no role to play over here. That is an indirect message associated. So that and all is okay. That and all is not a criterion here. Because exporter has to export the goods, exporter brought his goods to the Japanese port. Sorry, not Japanese port. In Hong Kong ports, there is a ship by name HMM. I would stop at Hong Kong port. In Hong Kong port, there is a ship which is being located there by name called as HMM, name of the ship. Okay, Hyundai Merchant Marine ship name. A ship which belongs, a ship which belongs to your South Korea, a South Korean ship. Okay. Now going to make a voyage from a HMM ship. Now going to make a voyage from Hong Kong port to Indian port. Okay. It's going to move the goods from Hong Kong port to Indian port. Yes. So goods are going to move from Hong Kong port to Indian port. By whom, if you're going to ask me, by a ship by name called as your HMM. HMM is the ship that is going to carry the goods, which is going to be involved in transportation of goods from your Hong Kong to India. Hope all this is all comfortable to you. HMM ship is going to be involved in transportation of goods from Hong Kong to India. Now, there are a few questions I have. I'm going to ask you, which I personally believe you all can answer. The responsibility of transporting the goods is with exporter. We have understood as per the earlier transaction. Block that is a separate transaction. That is responsibilities that are designed between your suppliers among themselves. We have nothing to do over here. That is a separate transaction. You can block it separately. It has nothing to do with. In fact, to the reverse charge itself, we came now only. Sir, over the last 15 minutes, then what we have been discussing? We are discussing the background for the reverse charge. Now, when a goods moves from Hong Kong port to the Indian ports through a particular ship by name called as HMM, a particular ship HMM for transportation of goods, my first question to be asked over here is, who is the supplier of service? Transportation of goods service by vessel. My question is very pointed. Who is the supplier of service in this transaction of transporting goods by vessel? Who is the supplier? Who is the supplier of service? In our example, who is the supplier of service? Ganapati, check. Transportation of goods by vessel. Who is the supplier of service? Okay. Yes, quick. Shruti ji, check your answer. My question is very simple. I am not asking which country. My question is, who is the supplier of ship? Supplier of service. I think I have given a ship name. Okay. A supplier of ship will become that particular ship, owner of the ship. In our example, it is going to be HMM line, Hyundai Merchant Marine, a particular ship. Now, for our discussion, they are engaged in the supply of services. Now, a very important question. A question that becomes important. In this transaction of transportation of goods by vessel, who is the, next question is, recipient of this service? Like how the earlier question was pointing out on supplier. Now, who is going to be the recipient of service? Okay. Now, country I don't want. In that country, one fellow we are referring here. we have at least a person by name called as exporter, importer, HMM. Okay, we have three people. Among these three people, who is the recipient? Is it your exporter? Is it your importer? Or it is going to be a HMM? Vaishnavi S. Revisit if possible. Okay. Let me repeat. Who is your recipient? A person who receives the services and who pays consideration. Jay Kumar, check your answer. Long ago we have discussed definition. Pradeep, check your answer. Kritika, check your answer. Who is the recipient of service? A person who receives the services. As an importer, will you receive the goods or you receive the services? Think about it. Think about it. That is why that background is given to you. The background of the transaction is very elaboratively discussed, is to identify who's the supplier, who's the recipient. Okay. Indian port, sorry, Kritika, check your answer. Recipient is, you have to work on here. No. A supplier is going to be a person who is going to supply the goods or services. Here we are discussing on service, more specifically transportation of goods by vessel service. So for that service, the supplier or where the supplier of service, supplier is going to be your supplier of transportation of goods by vessel. The supplier of transportation of goods by vessel service is going to be done by the respective ship company because they are only transporting the goods from location A to location B. Location A is Hong Kong, location B is India. Now, for whom they are transporting? Is it for the exported they are transporting or for the imported they are transporting? That answer will be automatic to you because it is the responsibility to reach the goods to the Indian port is that of exporter. Let me repeat. When you said that CIF basis is going to be your valuation, when you said the risk, cost, responsibility should be owned by transportation or including transportation of goods should be owned by the exporter, borne by the exporter, then it is your exporter who is responsible for everything. As simple as that. When you go to a nearby home appliance showroom and pay 35,000 and buy an air conditioner, like how the transportation cost is included in it. End of the day, you will say to the whole world that you have purchased a air conditioner. But only to him it will be known that you are buying an air conditioner. There is a transportation involved in it. Both I am responsible for it. Exporter is responsible for it. The goods is already with him. Maybe the exporter will engage a third party transporter to transport the goods to you. Similarly here, exporter who is in Hong Kong engages a third party transporter who transport the goods by vessel. No difference. Think for a minute. A lot of us are confusing this transaction. We are on a service transaction. We are not on the goods transaction. There is a service provided by HMM to a recipient who is located in Hong Kong, called as your exporter of goods. He is called as exporter of goods. Let me repeat. The exporter of goods who want his goods to be exported to India will be in touch with your HMM ship. Very interesting to note. Supplier of service is located in non-taxable territory. How you know, sir? South Korea is non-taxable territory. Recipient of service is again located in non-taxable territory. The recipient of transportation of goods by vessel services will be your, no doubt, your exporter. Your exporter of goods will be your recipient of service. Okay. When supplier of service is going to be located in non-taxable territory, recipient of service is also located in non-taxable territory, but the resultant movement of goods comes to India, a doubt comes here. Why the goods comes to India? Because it was designed like that. $50,000 is the consolidated price an Indian importer pays to an exporter. Within that $50,000, there is a $3,000 for transportation of goods, $47,000 for his machinery. But exporter does not reveal that. Exporter says, don't be bothered, my machine will come and reach your Indian customs port on this day. Transportation, I'll take care. Machinery, I'll take care. Now, an Indian importer will pay to exporter a consolidated sum of $50,000. So technically, an Indian importer is importing goods or importing services. When we get into that question, an Indian importer is importing goods. Indian importer is not importing services. So that is why he has to pay tax, customs duty, blah, blah, blah. That's all taken care. Now, another leg of this question. When we go back to the Hong Kong fellow, usually I give Japan example. That's why this time I changed the country. I'm so well finding it little challenging to get up. Because this transaction of Japan to India through HMM is very common than Hong Kong to India. Hong Kong will have rare movement of HMM. Coming back here, the Hong Kong exporter now splits his consideration. For my mission, 47. Actually, he will not incur $3,000. Actually, he incurs $2,500 only. $2,500 for transportation of goods by vessel will be paid by the exporter who is in Hong Kong, exporter of goods who is in Hong Kong, to the supplier of service for transportation of goods who is in South Korea. So let me repeat it. Indian importer will not pay any money to HMM. Not even $1 Indian importer will pay to HMM. It's an out and out privity of contract between HMM, South Korea, and the exporter in Hong Kong. Kindly make a note, this is a very dangerous position because your supplier outside India, recipient outside India, movement of goods from a place outside India to India, beneficiary of this movement of goods. For the transaction, there is a beneficiary. A last question of mine. On the transaction, in this whole transaction, there is a beneficiary. Who is the beneficiary? For transportation of goods by vessel service. There is a beneficiary. I am not asking a supplier or recipient. There is a beneficiary for transportation of goods service. Because this goods comes into India, there is a beneficiary. Check your answer. There is a beneficiary to the transaction. Okay, sir, you are speaking too much. I am not able to understand anything. What I'm going to discuss may be applicable at final level to 70% and 80% of us, maybe still 20% of us will not opt this model. Okay. For a lot of us, let me repeat, for a lot of us, supplier of the respective services is by academy. Recipient of the service is not we. It's our father and mother who paid the fees. But then who am I, sir? Beneficiary to the transaction. A beneficiary to the transaction is going to be the student. Supplier is going to be whom? The respective academy. Recipient is going to be whom? The respective noble soul who paid the consuming fees thing. Sir, I only paid out of my own money. That is why I told 20% of you will go to some other model, FOB model. I'll come to that later. For a lot of us, it is the respective guardian of us, parent of us. They paid. Technically, from the academic's perspective, supplier is academy, recipient you are not the recipient. I'm sorry, if you think you are the recipient, no. Recipient is a person who receives services and pay consideration. You are not paying consideration. I'm sorry, sir. Receipt is in my name. Let receipt be on name. Technically, if you go by the logic of recipient definition, recipient is somebody. Then who am I, sir, here sitting and listening to you? Beneficiary to the transaction. Supplier is HMM ship located in South Korea who is going to transport the goods from Hong Kong to India. Recipient of this service or who dropped the goods that was to be transported and signed up a contract, told move the goods from Hong Kong to India, I will pay $2,500 to you for transportation. Recipient of the service is your exporter of goods who is located in Hong Kong. Once the goods reaches the Indian port, I have to notify this person to come and take delivery of the goods. The beneficiary to the transaction is importer. When you could able to appreciate all the facts, what I have shared here is just facts. When you could able to appreciate all the facts, and with this background, when we go back to this entry, which discuss about services supplied by a person located in non-taxable territory. Supplied by a person located in non-taxable. By way of transportation of goods by vessel from a place outside India up to a customs station in India. Supplier of service by a person located in non-taxable territory. Transportation of goods from a place outside India to India. Recipient of service is also located in non-taxable territory. Recipient of service is also located in non-taxable territory, which means supplier outside India, recipient of service outside India. I'll be very conscious. Supplier of service outside India, recipient of service is outside India, but the movement of that transaction of goods or movement of that services is from a place outside India to India, then the beneficiary to the transaction would be liable to pay tax under reverse charge. A very careful entry. Whatever I have shared as part of the board discussion, all those whiteboard discussion becomes important. Let me repeat, even a small change somewhere, even a small change, a minor change somewhere will give a complete different dimension. Sir, instead of CIF basis, it is going to be FOB basis, which means the transportation responsibility to transport is it now going to be not with the exporter of goods? It is going to be with the importer of goods. I am sorry, then you will not have supplier outside India, maybe recipient in India. You will now go to the previous transaction. You will not be here. The moment you have a recipient in India, now if you carefully note, supplier of service is HMM ship, South Korea, non-taxable territory. Recipient of service is going to be an exporter of goods who is again located in Hong Kong. This example is the example. If you change any facts anywhere, I am sorry, it would not suit. It would not suit your reverse charge. Sir, it's not a South Korea ship, sir. It's this time MSC 310. MSC 310. A ship belongs to India who transport the goods by vessel. It is MSC 310 who transport the goods by vessel. Transport the goods by vessel, MSC 310. He transports, sir. What would be my situation? I am sorry. Apply it once again. MSC 310 is a ship which belongs to India, and this ship, I'm sorry, if you're going to bring the goods by this ship, no doubt, recipient is a non-taxable territory. Supplier of service will become what? Taxable territory. Can able to appreciate this discussion? Instead of HMM ship, if you are going to change to what? MSC 310, RCM not applicable. Instead of CIF value, if you are going to put FOB value, RCM under this entry not applicable. Under this entry, straight away not applicable. You have to verbatim satisfy all the conditions which we have discussed. Then only it will be applicable. If it is in this picture only, let me repeat. If it is in this picture only, it would satisfy what? Your transportation, your specific understanding of it. If it is not going to be in this picture, if it is not at this picture, sir, this time supplier of goods by vessel is not going to be supplier of goods, transportation of goods by vessel is going to be a person like this. This time the goods moves from Hong Kong port to Indian port by a Indian ship. Understand the difference. Earlier it used to move with a foreign ship. This time goods, everything remains same. Ship alone changed. Ship alone, goods this time comes in a Indian ship, not in a what? A foreign ship. If this be the situation, then let me come back to the original discussion. The activity would be treated as a item not covered by this reverse charge. Let me repeat, I am not saying tax is not applicable and all. RCM is not applicable. Why? Because supplier is in taxable territory, recipient of services in non-taxable. We want both supplier and recipient, both of them in non-taxable. Then only this discussion is applicable. A very careful discussion. Make yourself more comfortable on that discussion. So just maybe test. If you want, we can take up one question. Subject to, if you feel like you want it. Many times people feel no, sir, this itself is sufficient. Then it's sufficient. No doubt about it. In case if you feel, yes, we will take it up. Can we take up if you want? We will take a fresh discussion. Good Import Limited, a company in India, has imported goods from Hong Kong for a CIF value of dollars 50,000. The transportation of goods was handled by exporter Gate Limited in Hong Kong. The movement of goods, the movement of goods from Hong Kong to India was through ship by name Heyman, for which dollars 2,000, 1 minute correction, 3,000 was paid by exporter of goods. The Good Import Limited is of a view that they are not liable to pay GST. Do you agree? A question which couples two things: the applicability of reverse charge and testing the valuation for it. First, let me get into it some basic discussion, then we can move forward. So, same case study, three variations we will have, one more variation and one more variation maximum to have a complete understanding of this case study. Good Import Limited, a company who has imported goods from Hong Kong for a CIF value of $50,000, where the export is handled by another company called as Gate Limited in Hong Kong. The movement of goods from Hong Kong to India is going to be through a particular ship, Japan. That is the ship company belongs to Japan, for which $3,000 was paid by the Hong Kong exporter of goods for transportation. The Indian company is of the view they are not liable to pay GST. First question, do you agree with them? If you say no, you have to say no. No, if I write no, will I get that full mark, sir? No. No, you will not get full mark. Maybe you have to come up with your own solutions. When you write a descriptive question, that's okay. Now, I only want two answers here. If you agree with the company, say agree and determine your value of supply. If you don't agree with the company, say you don't agree and determine the value of supply. Agree, no value of supply. Don't agree, value of supply. That's all. Quick. Yes. So the value of supply will be yes. Quick. If few of us, somebody can virtually do, I believe all of us can do. Yes, I agreed with your answer, Shweta. $53,000. Shweta, value alone you check. Shweta, yes. And Shweta, money one and also, can you check the value? Let me repeat it. Here we are going to discuss about value of transportation of goods service. Okay. I am somehow having a feeling because a lot of you are all exposed to your customs law. You are all arriving a customs value. I don't want a customs value. That is import of goods. That's separate story. We are now under GST. We are asking your taxability only on transportation of goods by vessel. For transportation of goods by vessel service, what is going to be your tax liability and is it payable? That's all. Okay. So if you're going to come up with a fancy numbers of 30 lakhs and 35 lakhs plus, I am sorry, I am not in agreement with you in terms of the valuation is concerned. Okay. Your valuation has to be only for freight component. I hope you all understand. Customs duty, when you calculate on the goods. My discussion here, our discussion here is only on transportation of goods by vessel. அவ்வளவுதான். நீங்க இதுக்கு மொத்தமெல்லாம் எடுத்துன்னு வரக்கூடாது. டிரான்ஸ்போர்ட் சார்ஜஸ் தெரிஞ்சால் அதுக்கு போடுங்க. தெரியலனா என்ன பண்ணலாம்ன்றதை நான் சொல்றேன் அப்புறம். Value of supply is $50,000 is wrong. Value of supply 37,50,000 is wrong. Okay, value is $3,000. Agreed. But again, you have to come with the multiplication of that number and get it done. Ganapati value ma. Kritika Prakash. Vishnu Prasad through money and change the answer. Pradeep to Arun Graha. Have you got this 2250? May I know that? Or a data entry error? Let me repeat it. I still have a very great fear. You're all appreciating it or not. You're all on the goods side. I am not on the good side at all. I draw the diagram for a background. In my previous diagram, I am not on this background at all. I am not on the below only. Okay. Hong Kong port potache, Indian port potache, Nadula Kadaluk blue potache, wave potache, ship என்ன ஷிப்னு தெரியும், யாரு டிரான்ஸ்போர்ட் பண்றாங்க. டிரான்ஸ்போர்ட்டேஷன் ஆஃப் குட்ஸ் பை வெசல் இஸ் அவர் டார்கெட் ஹியர். We are absolutely not bothered. $3,000 into 75, how much you get? 37,50,000. Shweta, $3,000 into 75, you get 37,50,000. அப்படிலாம் ஏதாவது இருந்ததுன்னா நான் $3,000 தயாரா இருக்கேன். என்னைக்கு வேணா. யாராவது 37,50,000 கொடுப்பீங்க அப்படின்னா நான் $3,000 கொடுத்துடுறேன். Hmm. 3,000 into 75 is how much? That is what is your transportation of goods. I am not bothered about the value of your imported goods. I think I have already told you. In the question, absolutely I am not bothered about that. You, sir, there is a customs duty on that. Customs valuation will take care of it. I am out and out bothered about only transportation of goods by vessel. I think I have already shared it. I am only bothered about transportation of goods by vessel. In case of transportation of goods by vessel, what am I going to do? Sorry. Transportation of goods by vessel. First question, whether RCM applicable? Yes, RCM is applicable. Why RCM applicable? Very simple. Supplier of goods, supplier of transportation of goods by vessel. A supplier of transportation of goods by vessel. I'm using all the acronyms. Is in Japan. Who is the supplier? The respective shipping company. Who is going to be the recipient? Recipient for transportation of goods by vessel is the company in Hong Kong. Who is your Gate Limited. Then what is the Indian company doing here? He is a beneficiary. The Indian company is liable for RCM. Indian company who is the beneficiary to this transaction is liable for RCM on transportation of goods by vessel service. Sir, he has to pay customs duty also. No, adella where department. That is different department. That is import of goods. Now we are on services. Understand? We are completely on services. We have no role to speak now about section 12, section 14 of Customs Act. We have to speak only from section 5, subsection 3. For the transportation of goods by vessel, if the value of transportation is known. Incidentally, in this problem, it is known that it is $3,000 into rupees 75. Exchange rate is also given. Your value of supply will be 2,25,000. On 2,25,000, RCM at the rate of 5%. From a CMA exam perspective, 5% RCM on ocean freight. Sir, for other exams, this is not applicable. Sir, for other exam, generally they will stop at the earlier level value. CMA, as a case study question, they will want you to get that tax RCM at the rate of 5%. Ocean freight, IGST, at the rate of 5% to be calculated. So 2,25,000 into 5%, you can comfortably come up with that number, rupees 12,250. Yeah, 12,125. Kindly confirm. Huh? Am I right? 11,250. Yeah, thank you. 11,250. Okay, done. That is your tax payable. So my point here is make yourself more comfortable. Your answer should touch upon these lines. This itself is a macro presentation of answer. You have to first say RCM is applicable because supplier of transportation of goods by vessel is in Japan, recipient is also in foreign country, and hence the Indian beneficiary is liable to pay tax under RCM as per 5.3 read along with the notification. Value will be, yes. Sir, in this problem, value of transportation is given. In another problem, a new point I am raising now only. In another problem, if value of transportation is not given, what will happen? How I can determine the value of transportation? A very fair question, a very nice question. Note, this discussion comes as per valuation rules. Sorry, as per what is it? Not valuation rules, as per your rate notification. Note, if transportation of goods by vessel, if value of supply of transportation of goods by vessel is not available, is not known, not available, then 10% of CIF value will be adopted as, okay. So wherever you come out and say, I don't know, boss, the value of transportation of goods by vessel, kindly be reminded that if you come out and say, you are not aware of what is going to be your transportation of goods by vessel, all that stuff and all, that is how it will be. Yes, very clear. So even on an exceptional discussion, sir, if $3,000 is not given, very simple, you know the CIF value into 10%. That will be considered as. Sir, 20% we will add no FOB value. That is FOB value, customs, that story is different. Forget that story. That is for goods valuation. Here we are on services. Understand the fundamental difference. Many of the final students go confused only here, failing to understand the transaction. There are two transactions here. He does a supply of goods, he does a supply of services. For a supply of goods, I will pay customs duty and clear the goods as per customs law. That is independent. Under GST law, he is indirectly providing me a service also. For the services, am I not liable to pay? Yes, you are liable to pay. Who told not liable to pay? Yes, the value will be either mentioned or it will be 10% of CIF. Then, yes, can you move forward? Further next level discussion on this is there are many high court decisions. You have the Gujarat High Court decision which came out and held in the case of Moti Minerals Limited that levy of ocean freight, what we have discussed, levy of ocean freight is not valid because already on this money they pay a customs duty. When once again on that, if you collect it, it would be treated as a cascading effect. Unfortunately, you have the alternate decisions under this law. For example, the Maharashtra High Court and the Andhra Pradesh High Court comes out and says, no, there is no cascading effect at all. Whatever it is paid that they are eligible for credit, Two, moreover, there the customs law tax the goods. GST law taxes the service element associated with it. So there is no cascading effect at all. Nothing is there. So don't come out and say all that stories to us, is what the alternate courts view. Because there were two different courts, two different view standpoints that are all there. Immediately, the government went to the Supreme Court, and matter is currently pending before the Supreme Court. So those are all just for your information. None of these matters would be tested from an exam perspective. Court matters, not the question. The question would come up over here. One of a very important question. Often people can get confused on all these questions. I'll do one thing. I'll take up my next question over here. One minute. The next question, only one or two variations that I plan to bring in here. First variation is Good Import Limited, a company in India, has imported goods from Hong Kong for a CIF value of $50,000. The goods transportation of goods was handled by the exporter, Gate Limited, in HK. The movement of goods from HK to India was through by a ship, by a Indian ship, and the cost of transportation was paid by HK exporter. The goods importer limited is of the view they are not liable to pay GST. Do you agree with that? Yes, a very simple question. Quick. On to my next question. RCM applicable, not applicable. Why not applicable? Okay. Whenever you say RCM not applicable, why? That why should be form part of your understanding. That why gives you a better clarity. Yes. RCM applicable, RCM not applicable. Quick. I want to go to other. There are one more topic, serious topic is pending with me. Quick. RCM not applicable, why? RCM applicable, why? How you will get the amount, that's all. Yes. RCM is not applicable because the supplier of service is in taxable territory. A lot of you got it right. Let me repeat it. That is the most crucial element over here in this transaction. RCM is not applicable. Let me repeat. As you very rightly said, RCM is not applicable because supplier of service is in taxable. That is going to be a most crucial element associated with it. Beyond that, nothing great we have to discuss here. Sir, if it is not Indian ship, if it is some other foreign ship, no doubt, definitely RCM is applicable. At that time, you will apply the logic. Sir, I don't know the transportation. At that time, you will apply the logic of 10% of your CIF value as your transportation of goods by. True. Yes. Yes. Coming back here, see, Apurva or some of you, you are all calculating value of supply. No, value of supply will not come when there is no RCM. Where is the question of determining value of supply? When there is no RCM, there is no need for this itself. Done. Yes. Now we have the next question on to us, which is the question number C on the same facts. This time it is little different again. Good Import Limited, a company in India, has imported goods from Hong Kong for a FOB value of 45,000. The transportation of goods was handled by importer Good Import Limited in India. The movement of goods is from Hong Kong to India was through an Indian ship, and the cost of transportation is paid by the importer of goods, not exporter of goods. That's a type error. Importer of goods. The importer of the view, if he is not liable to pay tax, exchange rate is also. Yes, quick. Question number 3, case study number 3. Make yourself, we have only one more, and that would end up to the topic. Only 5 models are possible in this style. Only 5 is possible. We are on the 4th model. We are left with only one model. Sir, 3 only we discussed. See, giving transportation of goods rate, so much I spent is one model. In the same question, hiding the transportation and asking you to compute 10% of CIF value is another model. I am not doing that because that is going to be little easy. Okay. RCM applicable, not applicable. Yes. In case if the goods are going to be on FOB basis. Same logic, RCM not applicable on 2 grounds. One, supplier of service is in taxable territory. Supplier of service is in taxable territory. So RCM is not true. Can we move forward? Done. Yes. So RCM is not applicable because of your very simple reason that supplier of service is in non-taxable territory. Moreover, the services between the transportation of goods by vessel service is between supplier and recipient in India. Yes or no? Kindly rethink. This is one more version or additional point. Supplier, Goods Import Limited in India. Recipient is also, supplier, Indian ship is in India. The shipping company is in India. Recipient, Goods Import Limited in India. So there is no need for your reverse charge come into play. True. Yes. A last version of this question. Goods Import Limited has imported goods from a company in Hong Kong, FOB value. The transportation of goods was handled by the importer, Good Import Limited in India. The movement of goods from HK to India was through Heman, Japan ship. The cost of transportation dollars 2,500 was paid by importer of. Question number 4. Yes, think. Good Import Limited, a company in India, has imported goods from Hong Kong for a FOB value of $45,000. The transportation of goods was handled by importer Good Import Limited in India. The movement of goods from Hong Kong to India was through a particular ship, Cayman, a Japan ship. The cost of transportation was US $2,000 and was paid by the importer of goods. So RCM applicable, RCM not applicable. To me, the most important question from final perspective is this, because bulb has to glow. When bulb glow only, you will get it. Sai Subramaniam, check your answer. Nandini, check your answer. No hurry, check your answer. Check your answer. Yes. Vaishnavi K. Kirtana, check your answer. Shweta, check. Shweta, check. We know, Shweta, how people will learn, how people will remember. Consciously, we'll give a twist to that. That's why. Shweta, yes. Pradeep, check your answer. Haripriya Mohan, let me repeat it. I don't want any of you to use the word goods import. Let me repeat. I've been repeating 15 times. Don't bother about goods. Under customs law, we will bother about goods. Bother about a service entry here. Without goods, service entry cannot come. Without you buying a washing machine, there is no delivery charge. We are discussing only about delivery charges. We are not discussing about washing machine. I've been repeating 100 times. I don't still understand why again you are all going to goods. Goods is a customs law. Import of goods is not liable to GST. Why can't you understand this basic point? Have you all never read levy? Have you all never read section 5 subsection 1? In case of IGST on import of goods, it will be handled by customs. I again find it difficult. If you're going to come up with this proportion, I am sorry, I can only pity for you. You never understood the transaction. Plain Murray, check your answer. Ritika, check your answer. Aishwarya, check your answer. Rudra, check your answer. Ganapati, check your answer. See, let me repeat it. The problem with us, all of us, is we are now relating this entry only with the previous entry which we have discussed. Am I right? When you relate it with your previous entry which you have discussed, you will get an answer that RCM is not applicable. But you should not only link with that entry. Go back to the earlier discussion, a general import of service where a supplier of service, let me repeat, where a supplier of service is located in non-taxable territory, a recipient of service is located in taxable territory, and place of supply is going to be taxable territory, it would be treated as an import of service and the recipient is liable to pay tax under reverse charge. Yes or no? That entry we all forgot it. If in case it is going to be a transportation charges paid by an Indian importer to a foreign ship, it would not come under transportation of goods by vessel on a particular entry where supplier and recipient outside India. It would come to an entry transportation of goods by vessel under a regular import of service entry. Let me repeat, under a regular import of service entry, it will come, and end of the day, again, RCM will be applicable. These are all, you have to spend some more time on this topic. Then only we could be able to appreciate this discussion. Otherwise, it would be, these are all maximum questions. Sir, but for this 5 questions, do I have anything in this topic? That is why 1 hour discussion. That is why so much aspects associated with it. Beyond that, there is nothing in this topic. In and out, everything is discussed. Till today, no issue is pending on this topic. Everything we have carted out to you. Come back here, revisit your understanding. Somehow, when we read something new, no, what was earlier with us, we will obviously forget. When we read an entry like transportation of goods by vessel, why you forgot this entry? This is a general entry, no? Services provided. Has he told any specific services? Services supplied. That's all. What service? Any service. Any service means transportation of goods by vessel is also a service. Sir, but this service is there. No, this is an exclusive service. Transportation of goods by vessel where supplier is outside India, recipient outside India, then it will come. But this, sir, open entry, general entry. Now, in a situation where the recipient, let me repeat, where the recipient being your importer, that importer is going to here you have an importer who is going to pay to a foreign ship. Supplier of service, no doubt Hong Kong ship. Recipient of service is whom? Indian fellow. Regular import of service. This is covered by a regular import of service, not by the special entry. Special entry will take care of situation number 1 and situation number 2 there itself when freight charges are not given. Situation 3 and 4 was not covered by the special entry, either by the general entry. Situation 5 covered by the general entry. This is your complete understanding of it. Let me repeat. I have touched upon all the varieties under this. It's now your responsibility to take care. Any questions on this ground? Yes, I would happily take it up. You can unmute yourself and raise questions. Just give me a minute. One. Yes, if you have any doubt, yes, we would take it. Else, we can move forward towards our next discussion. Yes. Any questions, any doubt before we move forward on this? Make yourself comfortable. These are all one of your important entry, challenging entry. From an exam perspective, one can change, twist the questions and walk away comfortable. Quick. Yes. Quick. Yes. The last option, I understand a lot of you got it otherwise. A last option, a lot of you got it otherwise. All of you were been searching or discussing this entry only from transportation of goods by vessel, where supplier and recipient, both of them are outside. Somehow entry faded our mind, which is a general entry for import of service. Supplier located in non-taxable territory, recipient located in taxable territory, place of supply taxable territory. The recipient in India is liable to pay tax on import of service. That entry we forgot. That is the reason why fifth option went wrong for a lot of us. Done. Quick. No doubts. Can I move forward to a next entry for discussion on a closure note? Yes. Done. The next entry for a discussion is on joint development. Okay, entry which is again having different aspects like what we discussed earlier. Two entries coupled together we can discuss, no doubt about it, where there is going to be a transfer of a development right, or there is going to be a transfer of a FSI, floor space index. When these are all transferred by a landowner to a promoter who is going to construct the building and give it back landowner something, then the respective promoter is liable to pay tax under reverse charge. As an entry, when we read it, instantly we can read it, walk away out of this entry without giving much weightage to the entry. But when someone read through this entry more meticulously, first we have to be aware of a situation called as joint development agreement. What do we mean by a joint development agreement? Where there is going to be a landowner who is interested in transferring his floor space index or development right, or whatever be it, whatever he has. There is a landowner. There is a landowner who is interested in transferring the development right, or you can call it as whatever be it, a floor space index, or you can call it as your what is it, uh, somebody who gives even a long-term lease for the land. All these words are common words, where the landowner who had a piece of land, landowner had 5 grounds of land. 5 ground. Landowner of this 5 ground, gave 2.5 ground. Let me repeat. Landowner of this 5 ground landowner of the 5 ground give 2.5 ground to the builder. You can ask me why the landowner gives 2.5 grounds to the builder. Very simple point, which all of us can easily understand. Because builder promised that builder would construct and give 5 houses. Builder promised builder would construct and give 5 houses, which means on this 5 grounds, 10 houses are going to be built as per the joint development agreement, and of the 10 houses are going to be built. Of the 10 houses, 5 houses will be given to the landowner. Balance 5 houses that would be sold by the builder, or that you can call it as what? Builder or promoters. Builder or promoters share 5 house. Now, will the landowner gets this 5 houses at free of cost? No. The landowner gets the 5 houses after relinquishing his right in the land by way of land development right. So there is a land development right which he has in the land. This land development right moves from the builder, from the landowner to promoter for 5 house. In turn, the promoter construct and give 5 houses to landowner. Among the constructed 10 houses, 5 houses are with the promoter, which is he will sell it to third party buyers. Understand the broader scheme of this joint development. Once you understand the scheme of joint development only, we can move forward. The scheme of joint development is like this, where a landowner has 5 grounds of land. A landowner who has 5 grounds of land, that landowner believes by keeping this 5 grounds of land, I can keep it as it is only. I cannot do any great development and all. So let me wait for a builder to come and take this land. I'm not interested in selling at an outright price because I don't want money also, but I want some development activity to be happen on this field. There is a promoter, builder, whomever you're going to call it as. I'm calling it as promoter because the law calls in that way. A promoter who comes with a technical expertise of constructing all those building, high-rise building, everything, who's also having some initial money. I would not say a complete money, having an initial money to invest and do certain business. There is a promoter. Both of them come and sit together, discuss. Landowner says, I have a land which I am ready to give. Promoters value that land. Yes, after valuing your land, I believe 10 flats can be constructed, 10 houses can be constructed. Promoter says 10 houses can be constructed. So you allot some land development right to me. land development right to me. I will in turn construct on the entire 10 ground flats, sorry, entire 5 ground 10 flats. I will give back you in turn 5 houses. You can sell it to any independent person of your wish. He will not come into it. That is your share. My share will be again 5 houses, balance 5 houses. In this process, what happens? Landowner who had kept the ideal land, now he gets 5 houses. He gives away a 5 house land. Builder gets that 5 house land, plus he spends some money on construction, construct the entire 10 houses, sell his share of 5 houses. If you put some numbers 1 to 10, 1 to 5 belongs to house of the landowner. 6 to 10 belongs to the house of builder. Builder can sell only 6 to 10 to his consumers and collect money. With that money, he'll construct all 10 houses. Sir, is it possible? Yes. In a joint development, that money will be available. It's clear mathematics. It will go like this only. In a joint development, all this is possible. So, first, are you all agreeable to this scheme of joint development? I have my own doubts, because how far you have come across in your capital gains joint development, how far your understanding of joint development and capital gains and other matters, I'm not sure. Have you been able to propose and accept a scheme like that? If you say yes, we can move forward. Otherwise, if you have a doubt here itself, we have to sit and discuss here itself. Yes. Can we move forward? Any doubts on the scheme? Done. Scheme of land development is clear. A few more responses I would appreciate. Yes. Scheme is very clear. Done. Santosh. Now, coming back here. In fact, for a better clarity, we will number the houses. 1 to 5 is landowner portion of houses. Promoter share will be 6 to 10. 6 to 10 will be promoter's share. Okay. Promoter, let me repeat. Promoter, first this is what will happen. Promoter will sell the 5 flats. Promoter promoter will sell all his flats to various people. Okay. This is H6 he sold. There could be a H7 he would have sold. And again H8. You're not bothered about that. I'm just for a better understanding, H8. H9 and H10. All are sold by him. Whenever he sells from those customers, he will collect money and pay GST on that. It's a sale of flat under construction, and he'll pay GST to the government after collecting from them. Dispute is not here. All these are all taxable. They'll collect necessary tax based on the rate applicable. Now, similarly, on the 5 flats given to the landowner always have this habit, because he gets all the flats after construction. Generally, he will sell those flats after construction. And as you all aware from schedule 2, if you sell a flat after construction, then it is not liable for what? GST. A flat which is being sold after construction. Consciously, 1 or 2 flats he will keep it for himself. After his personal usage, maybe 3 flats he sells. Let's assume. But all 3 flats he sells after construction. Could be H3, H5, H4. I'm not stepping into it. That is his lookout. This tax on sale of H7, H8, H9, H10, tax will be paid by promoter, forward supply. On H3, H4, H5, tax would be paid by what? Again, forward supply by landowner. You pay, you don't pay, you claim exemption. These are all independent lookouts. We are all not on that discussion. There is a movement of a development right from the landowner to the promoter. There is a transfer of development right. There is a transfer of floor space index. There is a transfer of long-term lease. On the transfer of development right, on the transfer of development right or floor space index. Floor space index means how much flats you can construct. That one mathematical model they will say. If your land is 2,400 square feet, you can construct up to 4,800 square feet in that area, in that land. Sorry, I have a land of 1,000 square feet, then you can your house can be up to 2,000 square feet. 2 FSI we call it as. That is called as FSI, floor space index, or long-term lease. No doubt there is a transfer of either a development right or a FSI or a long-term lease to the promoter. Here, government says the respective promoter is liable to pay tax. Actually, supplier of service is landowner, but government is very clear. The promoter alone is liable to pay tax. Don't ask me why and all. Promoter is liable to pay tax. When, sir? Very simple. When he promoter is liable under RCM. But very interesting point is, if all houses of promoter, okay, if all houses of promoter are sold before completion certificate, or let me repeat, if all promoters, if the promoters houses are sold before obtaining completion certificate, then on this they are exempted from RCM. On this they are exempted. In fact, I have completed only level 1. I don't know, I don't have space in switch. So what I'm going to do, at the end of the day, if you understood, it's okay. Then that's all. See, if H6, H7, H8, H9, H10, if all the 5 flats who promoter has sold before getting completion certificate. Now, why completion certificate is important? If you obtain completion certificate, after obtaining completion certificate, if you sell, then it is not liable to GST. When it is not liable to GST, then you cannot claim this exemption. So, prima facie idea is, have you sold all the flat before obtaining completion certificate? Yes. Promoter is liable to pay tax under RCM. No change in that. However, if all the houses of promoter are sold before CC is obtained, on the transfer of development right, or on this RCM is exempted. This RCM liability is exempted. Sir, partly I sold, partly exempted. Okay, done. This is a first level. I have one more level. Okay, partly I told, that is the next level. There is a third level and there is a worst level. Okay, 4 level. You are on the first level. Done. Any questions? I will take. Tax on all 10 houses are now in a pre-level. All are transactions now. I don't understand your question, Shweta. Tax on all 10 houses means I don't understand. You can unmute yourself and ask. Yes. Quick. Quick. If you have any questions, then yes, I would take it up. This is the first level. We have 2-3 levels more to discuss. As you rise in your game, how the level goes. Similarly, here also difficulty level rises. You will have the challenge of it. Quick. Don't expect a higher level with a lower difficulty. Higher level, higher difficulty only. Else we can move forward straight away. Can we move forward? If only 2 holders, that's the second part of the discussion, Ambika. If 2 houses are sold and balance 3 houses are sold after obtaining completion certificate, then the transfer of development right to the extent of 2 houses will get exempted. Balance 3 houses would be taxable. Yes. If a landowner is going to receive a cash consideration, then only capital gain will be attracted. You will not be brought into this discussion itself. Under a joint development only we are discussing. Okay, if it is joint development means pakka barter transaction. Hope you all will appreciate. If it is a cash consideration, then it is not coming up here at all. It is out from GST. It's a sale of land, purchase of land. So no GST, no implications. True. That, yes. So Vaishnavi, the question of things and all will not arise. I sold you 5 ground, obtained from you 5 crores. It's a sale of land transaction. Though there might be a development right involved in it, we are not bothered about it. It's a vanilla sale transaction. No, no, no. I will collect from you 1 crore free money plus 5 flats. In turn, I assign you land for the other 5 flats. Joint development. Okay. A joint development can have money plus other than cash considerations. Okay. It need not be only a pure barter. It can be a, now what example I have given is a pure barter, but in sometimes in cases it will be other than pure barter, because on the day one you will not know what is going to be your tentative flats that you're going to receive. 5 grounds and all is easy. We have a client, mean they are still finding it difficult to close the contract. They have in one of the very important area in OMR, they have 84 grounds. 84 grounds. 84 grounds is a very big mass area. And if you're going to pen down your thoughts itself for an agreement, the challenge that comes is we don't know tomorrow what will be the development right we will get, what will be the FSI, and we are they have to commit now itself. They are not interested in committing. No builder is interested in committing for 50-50 joint venture. Builders are interested only for uh, tomorrow how much ever FSI eligible we will work on that. 65% will come to the builder, 35% to the landowner. Landowner is not interested. The matter is pending as it is. Landowner is in no hurry to sell the land, so he is comfortable. He's mum. He is not bothered about anything that is happening around him. So that's why. See, it's all depends upon the transaction. We can't preempt it or predict it. Okay. Moving forward from this discussion. The challenges that would start up here is I've been discussing only with from a residential house perspective. I never used a word. A development like this can also involve construction of a commercial property. If it is a commercial property, the exemption that we read is not applicable. The exemption that we read is applicable only if it is a residential property. Here we read an RCM, transfer of a development right, transfer of a FSI from the landowner to the promoter, RCM is applicable, no doubt. When it comes to commercial, certain flats we are going to construct. Of that, 3 are commercial apartments, 7 are residential apartments. Then for the 3 commercial apartments, automatically RCM is applicable, because we have we are we are exempting only if it is a residential house. That to a residential house sold before CC. Like Ambika raised the question, sir, we had 2 houses sold before completion certificate, a lot more houses, 3 houses sold after completion certificate, then transfer of development right. Take the full value of transfer of development right. To the extent of 2 houses, you exempt them. To the extent of 3 houses, promoter is liable to pay tax under reverse charge. Okay. So this would be discussing in case of partial transaction. Again, this would be discussing in case of your other transaction. So this is a discussion only in connection with RCM related matters. Let me repeat, I am not going nowhere board, because in this transactions, we have 6 discussion to make. That is what the full level of discussion. Okay. but all that we will make it at a different level just for your understanding purposes. Everything would start from here. Transfer of development right or FSI by landowner to promoter. No doubt RCM is applicable in case of commercial property. In the same way, transfer of the first entry, no exemption at all. RCM is applicable in case of commercial property. Transfer development right or FSI by landowner to promoter. RCM is applicable in case of residential property to the extent of flats or residential property sold after obtaining completion certificate CC. Then C. Sale of flats by promoter. Sale of flats by promoter to end customer being a commercial property. D. Sale of flats by promoter being a commercial property after obtaining CC. Okay. Followed by sale of flat by promoter to end consumer being a residential property after obtaining CC. Sale of flat by landowner to end consumer being a commercial property under construction. Okay, when it comes to promoter, that wording is not required, but when it comes to landowner, that wording under construction is required. Under construction. That's all, sir. Last leg is there. Sale of construction of residential property or commercial property to the landowner by the promoter. RCM on shortfall tax as per section 9(4) of if we address our questions from A to K, we are closing on one industry called as construction industry. Sir, on all this, what is applicable for my exam? All. Very simple. All. Do I need to understand so much in detail? If we understand this much only, we would be able to take complete grip on the transactions. Otherwise, we would not be able to take a complete grip. Maybe if I would take it up one more level. Yeah, reversal of ITC as per Rule 42 and 43 of this sums up. That's all. இதுக்கு மேல ஏதாவது இருக்கானா சத்தியமா கிடையாது. But this requires an understanding by itself. Today is not the day to take up all these upfront. Definitely not the day. A day will come where we will know little by little, where we would be, now we are aware that there is a transfer of development right that is taxable. A flat sold before construction, flat sold during the construction, what would happen, how that would get managed, all that. And again, in case of any transaction between your landowner and builder, how it has to be handled. Over a period of time, we will know. It's very early for us to predict all this. These are all transactions. I just want to highlight to you. When we are aware of all these transactions, we can close down that yes, we are really done with the transactions. Something and all is a little easy. Straight away, C, D, E, F, you can easily answer. Sale of flat by promoter to end consumer, being a commercial property, taxable when it is under construction. After construction, if you supply, it is exempted. Not exempted, it is excluded from GST. Again, under construction, it is taxable. At a later point in time, it is excluded. And then later, again, landowner, same is the case of landowner. When landowner sells under construction property, he is also engaged in supply, he is leviable to GST. After construction, he is out from the tax. Okay, so no change. Those C to J will be little easy. A, B, then I, K, I, J, K, G, H, I, G, H, I, J, K. Some numbering problem there. Okay, not sure. G, H, is I, J, K, H, I, J. Half of it, of you. So much questions I have. Yes, we have so much questions. A right time for us to take further elaborate and discuss about it would be after completing ITC. For the moment, we understood reverse charge. On that reverse charge, commercial property is taxable, residential property is exempted. But please be reminded, you should know answers for all these questions. Half of it, you know. Let me repeat. I'm not scaring you. It's just want to highlight. See, understand a completeness of a transaction. When we are complete only, we can expose ourselves to any questions. When we prepare for A and go, and the question is on the B, we are done. When we prepare so much from a promoter's perspective and a question, it is from a landowner's perspective. A landowner what to do? Landowner what to do? Same. Like how promoter is going to sell under construction, landowner will also sell under construction. Probably on a live examples, what we would have seen is, we would have seen only landowner using it for himself, or we would have a personal experience. But there are many instances where landowner will use it for an official purpose. There is a construction company which has a 10 ground land. There is a promoter company which want to promote on the building. This 10 grounds which are there in the construction company is also a promoter. Now not interested in promotion of it because of various challenges. Some other person is interested to let him do. He'll give me 10 flats. I will sell my 10 flats. When under construction itself, I am also a businessman. I also don't want to pile up stock and tomorrow money is tomorrow money. Today's money is today's money. That understanding I also make. Keep it all in mind. These are all the questions. Questions in construction industry can be A to M. Beyond that, do we have any questions, sir? We have questions, but those are all very minor in nature. You can answer it by yourself. For example, if I collect some charges extra separately, what will happen when we discuss valuation? At that time, you will know. When I'm going to collect some special money for some special purposes, what will happen? In case if I cancel the booking advance and all, what will happen? So questions like that and all will form part of respective topic. But major as a transaction to discuss, these are all your transactions. So this sums up our discussion at today's level. Make a note of this, my humble submission. Draw your diagram. Okay, draw your diagram. Understand the logic. 10 grounds of land is there. 20 houses is going to get constructed. 10 shops is going to get constructed. 5 shops will be given to the landowner. 5 shops will be taken by the builder. 10 houses will be given to the landowner. 10 houses will be taken by the builder. Builder among the 10 houses sold 7 houses before completion, 3 houses after completion. Among the 5 shops, 3 shops before completion, 2 shops after completion. Same, come to this side, landowner. Landowner among his 10 houses sold 6 houses before completion, 4 houses after completion. 2 shops before completion, 3 shops after completion. Now, look at the diagram. All this covered from A to I. Not only I, J. A to J, all are covered. Once you are done with it, one more activity comes in. The activity by the promoter to the landowner. Promoter gave the land. The promoter gave the land to the landowner, gave the land to the promoter. Promoter in turn constructs and gives a building. That activity of construction by promoter to the landowner, construction of residential house or commercial property to the landowner by the promoter, that is promoter to landowner, how that will be valued. Plus 2 special discussions, shortfall tax and RCM. Both I will take it up on a construction discussion. We will have a 2.5 hours discussion only on this industry, coming back and touching all these points. Okay, at that time we'll take that. Till that time, this is what is the discussion at which level we close. Any questions? Anything? Yes, I would take it up. That no questions. Surely no question. So whatever we discussed, all are understood. Mark my word, whatever we discussed at a question level, A to M. Sir, I could able to understand the question from A to M. If you could able to understand the question itself from A to M, you are at a different flight. No jokes, you are at a different flight. You are now matching your understanding with the DGM finance of a construction industry, of that company, construction industry, to that extent. Unless you don't have an exposure, unless you don't have a thinking pattern of that, it would be very tough to understand question number A to M. No, I have a lacuna in understanding. Revisit it. Maybe today it is a little overloaded. I do understand. That overloading will be there. Game level goes up. Difficulty level also goes up. That's understandable. We play a lot of games. Don't expect a higher level of a game you want to play, and yes. So that sums up our discussion associated with it. Yes, any questions? Yes, I would take it. So I thank you all for effective and patient listening. Thank you.
Thank you, sir.
Thank you.
Thank you, sir.
Thank you, sir.
Thank you. Thank you.
Thank you, sir.
Thank you, sir.